It is time to take a look at your money right now on Good Morning Quad Cities. But first, here's the weekly stock market recap. The S&P 500, NASDAQ, and the Dow all saw small gains last week. The U.S. stock market is in the middle of a 7-month decline that's caused investors a lot of pain and anxiety so far this year. All three major stock market indexes have suffered significant double-digit losses. So, of course, we have Mark Grywacheski here to break it down and if we should be very concerned. So what is your take from what we're seeing on the stock market right now?
Well, in the first 3 months of July, we have seen this slight rise coming off the low point of this 7-month decline in the stock market. But, just look at this graph here, David, and you can just see how extensive and severe this decline has been from, January 1st through June 30th. In the first 6 months of the year, David, the S&P 500 lost 20.6%. Its worst performance going back to 1970. The NASDAQ lost 29.5%. Its worst performance in the entire history of the NASDAQ stock index. The Dow Jones Industrial Average lost 15.3%. Its worst performance since 1962. And look, the stock market often acts as kind of like a proxy on the health of the U.S. economy. And with inflation at a 40-year high, and now we have these rising interest rates, Wall Street has this growing concern that the U.S. economy is heading towards a recession. And it's all that uncertainty on the future outlook of the U.S. economy that's driving this market decline.
Yikes. And looking at all this, obviously, it's not good news either way you look at it. But is there one of these that we should be looking at more closely than the others?
Well, there's a number of different stock market indexes, but these are the main three that Wall Street, typically mentions. But really, it's the top two, David, the S&P 500 and the NASDAQ that Wall Street really, focuses on. The S&P 500 is often referred to as the broader stock market index, as it tracks the stock performance of the 500 largest publicly traded companies in the U.S., whereas the NASDAQ is often referred to as the tech-heavy NASDAQ, as it tracks the stock performance of over 3,000 companies, many of those in that technology sector, and technology has and will continue to drive, be a key part of the U.S. economy. And then finally, the Dow Jones Industrial Average, little fact here, is America's oldest stock market index, created all the way back, over 130 years ago. But the Dow Jones Industrial Average, David, is only comprised of 30 stocks. So, in today's economy, it really doesn't capture, the breadth of the stock market or the influence of that technology sector like the S&P 500 and the NASDAQ.
And when we're looking at the stock market, I think the average Joe doesn't really know how to navigate different things. We mention the different stocks and we can see the plus or the minus, and that's basically the limitations of most of our knowledge. So how would the average person navigate the stock market right now?
Well, it's just not the average Joe. I mean, there's Wall Street professionals kind of scratching their head as well here. Look, there's a tremendous amount of uncertainty in the second half of this year. To what extent will inflation start to decline? When will it start to decline? To what extent will the Federal Reserve continue raising interest rates? Will the economy go into a recession? If it does, David, will it be short and mild? Will it be, longer and much more severe? And all of these uncertainties will ultimately determine the speed and direction of the stock market in this second half of the year. My advice, one, stay diversified. There is a time and a place to, maybe become a little bit more aggressive in your portfolio. This is not the time and a place to become a little bit more aggressive. And second, this stock market is just going to require patience. In the entire 130-plus year history of the U.S. stock market, the market's always recovered. It's always went on to set new all-time highs. We just don't know how many days, weeks, or months it's going to take to get back to those new all-time highs.
We just need that crystal ball.
We do.
Thank you, Mark, so much for joining us.
Again.
Absolutely, you too.